capital firm Felicis recently announced that it raised its 10th fund at $900 million, the company's biggest to date. Comes just 2 years after Felicis announced its ninth round of $825 million. And joining me now with more is Aydin, Senkut, Felicis founder and managing partner. Aydin, welcome.
Thank you. Thanks, Kristen. Thank you for having me.
Yes, thank you so much for joining us today. And tell me how your investment strategy has evolved. Are you writing bigger checks, moving faster, or is it really about sector focus and the opportunity in AI right now?
Well, we think, Kristen, that right now we're in a major inflection point, so big that we think it's comparable, maybe even larger than what we saw with the internet wave. And we think it is so important that it's bigger than any cycle. And a great example of that is value creation in tech is all about revenue growth. When we look at public markets, right now, the single most important thing that people value is the revenue growth. And we are, when we go back to Google age, companies, when they got to $100 million of revenue in 5 years, that was a big achievement. Today, we're seeing companies getting to that 100 million critical point in 2 years. We even have some companies getting there in 12 months in terms of gross revenue. We have one portfolio company that did that in 11 months on a gross revenue basis. So it's just a sign that this is not a fad. This is not something people speculate about. It's a real major shift in value creation. That's why we're so excited. It just happens to align so nicely with our 10th fund. And we are also very excited and proud about it because there are not many venture firms that got started and had the chance to hit that 10th fund mark. But we are very, very excited that we can leverage this incredible inflection point and kind of double down. And besides AI, I mean, we think that it's kind of, if you look back 100 years ago, railways became kind of the critical infrastructure of moving goods, then gave enabled many other great industries to form. And similarly, we think it's not just the AI impacting horizontal platforms and vertical applications, but that infrastructure is going to, result in many other sectors getting impacted as well. And we think that's going to transcend into areas like security, where we're seeing also major trends. There's like an unprecedented number of cyber attacks. It's another really great area where we're seeing value creation. Not to mention some newer areas, maybe less popular in tech, like defense and what we call global resilience, which includes energy. And all this AI infrastructure, as you can see, is also, consuming a lot of energy. People are concerned in making sure that that energy is, green. And, there's a lot of great ideas and a lot of great pull from many different directions. And so we're very excited to be right in the middle of it and leverage this 10 fund to find amazing companies.
That sounds amazing. I know you said, quote, dozens of $100 billion plus AI native companies will be built this decade, end quote. And what specific market dynamics are you seeing that make you believe that?
Well, I think I should say that we're nothing if not optimistic. We have to be. One of the most important trends to highlight here, up until now, a lot of tech value creation was based on software, which is a limited part of companies' operating budget. I mean, you can say like around 10%, maybe 15%. I think the biggest change that we're witnessing here is with AI, we are now seeing value creation get into the labor budget, which is a much larger percentage of companies' values and assets. I mean, people are the most important asset, and it's like more like 80% of a company's operating budget. So even a small change in that, if AI were to impact even just 5% of that, just the change in operating margins alone would amount to hundreds of billions of dollars. And if you apply market multiples to that, obviously we're getting to very, very big numbers. But I think the main message here is that we're going to see a ton more 10 billion companies and probably a lot more $100 billion companies than people expect. And a lot of that value creation is, again, accrue in the tech sector, especially companies that have successfully deployed AI. And if I dare to say AI native, AI first companies, because the way that they are built, I think they are going to take over a lot of companies that were not designed with AI in mind or AI first. So there's going to be another big change. And I think every time there is change, that's where new value creation and value capture happens. And that's what makes venture capital really exciting.
Well, we know the VC landscape is a crowded space, especially when it comes to AI. And so what is your secret sauce, Aydin, at Felicis for winning some of these competitive rounds?
I do have to say it's more competitive than ever. I mean, just to give you an anecdote, we used to say, oh, when we are bidding for a company and the company gets 2 to 3 term sheets, that's competitive. I think we're in a new era similar to extreme value creation that competitive deals now are like 8, 10, 12 term sheets, an unprecedented number that I think my peers would agree. Look, if you were to think of Felicis, I think Paul Graham from YC coined a great term of founder mode. We are constantly in founder mode. And what that means is we are reflecting and mirroring the intensity and commitment of our founders. Also, our main mission as a firm is to be the most trusted VC among the founders. And the way that we are trying to achieve that is not just by talking about it, but by aiming to make our founders unbreakable, by making sure that we have the highest reputation among founders and with great initiatives, whether it's voting our shares with the founders or supporting them with our founder pledge, where we basically spend our own money to be able to afford better mental resilience for founders, like whether it's coaching, therapy, and all of that. Everything is designed. Every little step that we take, everything that we do is all about making our founders the best they can be, making them, what we call them, like we want to make them unbreakable, basically. And this also means that we need to mirror and reflect their intensity, their speed. That also means we have to move faster than anybody else and with higher conviction. The last point that I'm going to add, that one of the things that makes a venture firm great and catapults it to the upper echelons is to be able to lead deals with conviction. And I think another reason why we have this fund close to $1 billion in size is that we have been able to transcend from kind of a participating investor to now, these days, we have been able to lead or co-lead 93% of our investments. So you can't just, move with conviction and speed. If you're unable to lead the deals, that's not going to be effective. So all of that kind of plays in, and, we're very excited where we are. And obviously, every day is a day one for us, and we're going to be relentless and humble and hungry to keep elevating our position in the landscape and, the ecosystem.
Well, Aydin, you've scored some massive wins over your career. What's your process to identify category-defining companies before they go public? And what can we expect to see next?
One of the things that people handicap me is that, I was not a trained engineer. And I think one of the things that I always do to kind of make up for, let's say, like not being an engineer, is you have to understand mainstream trends in very simple terms. And when you look at some of our biggest hits, even though they had great technology that helped them become great companies, at the end, they solved a very big problem in a very simple way that was 10x better, cheaper, faster. That kind of like one of the biggest lessons I learned at Google. If you look at Shopify, it basically became the leading company because they captured this trend of kind of brick and mortar businesses becoming also one with bits, technology businesses. And people did want to focus on single platform, and they captured that great. Adyen became the leading global payment platform. We saw companies that were still struggling, even Google and Facebook at, about a decade ago in certain countries. And we're like, there's a great opportunity for that. So while it might sound like, hey, we understood something that was very complex in a technology perspective, what we have really done is look forward, imagine and dream where technology can have a big impact in a massive market. And we have captured, great companies. And I would be remiss if I didn't mention Canva. Similarly, when creativity was not hot, like about 13, 14 years ago, when nobody was thinking about it, when a great product was PowerPoint, which actually, was not that great in terms of usability, Canva came out and said, we want to democratize design. So again, and make it affordable and accessible, similar to how Google wanted to make information accessible, and you leverage it for the masses. So we have been able to do that again and again in many different sectors. And now we get to see that in areas like AI, security, infrastructure, not to mention health and biotech.
I do want to dig in a bit deeper here, Aydin, because you're investing in knowledge work merging with software. And I want you to give us a concrete example of what that looks like and why traditional software companies can't just simply add some of these AI features.
Absolutely. I mean, look, a great way to do that is just to explain it in simple terms. Software companies essentially like think of it as like data processing, but you still need to know what data to put in. You need to tell the software what to do, and then the software essentially gives you a bunch of results that you still have to synthesize. Now, let me give you an interesting stat. An average company, if they're at a decent size, has maybe couple hundred pieces of software, and value right now is being accrued by people using the software and their synthesis, which is not bad, except that it is not fast enough and it's not as scalable. Now, imagine a new era where not only do you have software processing the data, but AI knows what data to put in the software, gets the result, and much faster than humans can translate and synthesize what's coming out of that, basically across 100 different areas. And then through that intelligence, through that increased understanding of what that data means, it can create the cycle a lot faster. So this is why the AI age, one of the first things that you're going to see in addition to the large models, which a lot of us are using either at a consumer level or enterprise level, is what I would call workflow companies, because what a lot of companies have done is made a massive investment, hundreds of pieces of software, but I'm not really sure how much value they're getting out of it. And through AI, they can actually like allow the synthesis, allow the synthesis of that information at a much more radical speed and scale than ever been done before. And that's why we're excited that we think one of the next big waves will be workflows, not to mention many other areas.
Aydin, I see that you often tell founders they need to engineer their own luck. What does that mean in practice?
So let me double click on that. So Felicis means good fortune in Latin. And there is this conception that when great success happens, it was a matter of luck. And I think what we basically say, one of our firm mottos is you have to engineer the luck. I mean, there's always a factor of chance, but I think the reality is in order to get lucky, you need to know that you are in a position where luck has found you. You need to be prepared to leverage it. And when you look at the most successful companies, of course, we can call them lucky, but then you look at it and it's similar to sports teams or any other thing. You find out that they're the ones that work the hardest. They saw the trend before anybody else. They hired the right people before the inflection point happened. They made the right investments. They did not only have a plan A, but a plan B, plan C, and plan D. And so all it is to say that our job is to have the similar kind of hardcore mentality to help our companies to not just be prepared for the luck, but when the luck finds them, to leverage it to the maximum degree possible. And that's why, like, even though our name in Latin means good fortune, we think it's all about engineering that good fortune and having the hustle and the ambition and the drive, to leverage any of those points, which will be not many, and translate that into great success.
Aydin Senkut, Felicis founder and managing partner, thank you so much for sharing your time and insight with us here at the NYSE.
Thank you, Kristen. Thank you again for having me.